morning, Nitin. Good morning, Sarika. Good morning, both of you. Couple of minutes and then we'll start the session. Good morning, Manisha. Good morning, Himanshu. Today, we're going to talk about fixed assets. So, one more minute and then we'll start our session. Thank you, everyone. Good morning, Subha. Good morning, Sushil. Okay, so let us begin. So what we're going to talk today, or what we're going to discuss today, is about fixed assets. Many of you already know, I'm sure. Many of you maybe know, some of you maybe know partially, etc. So we'll do asset management process today. And this is what we're going to do. So what is our agenda for today? What we would like to do as far as the fixed asset is concerned. In every company, we might have certain fixed assets. You have a machine, you have equipments, you have vehicle, and they are called fixed assets. So fixed assets go through their own cycle. So we will discuss that, what a fixed asset cycle end-to-end in SAP Business One look like. So what do we do in the fixed asset? So that is what we will be discussing in this session. That is what we will be doing. So, and that is our agenda for today. So what we're going to do, we're going to define asset master. We're going to look at how the asset master capitalization process works. Capitalization. You see that here, capitalization. Capitalization basically means, for example, in my company, we are buying a truck. If I'm buying a truck, that truck is a fixed asset. How do I manage that truck, which I probably be using for many years in our SAP software? So we purchase. So if you see here, if you look at carefully, AP invoice, vendor invoice. So we purchase asset. When we purchase asset, it creates a capitalization document. Capitalization. Capitalization document can be created automatically. So when we create account payable, it will create a capitalization document automatically. Capitalization basically means now this asset is part of my books. Now this asset is part of my system. So that is what capitalization is about. So we're going to see that how this capitalization works. After that, if you see here, there is a depreciation. This depreciation can run manually. If you see here, there are two things. If you look at carefully, in SAP, in order to run depreciation, you can run depreciation manually, or there is a depreciation run, which can run periodically. So there are two possibilities here. We look at it here, we have something called depreciation run, or we have something here called manual depreciation. So there are two methods. Capitalization document can also be created in two different ways. Capitalization document you can create automatically when you purchase an asset. So when you're buying a truck, system can create a capitalization document automatically. So we're going to do that scenario. Or you can run this depreciation manually also. When you run depreciation run, of course, it update your fixed asset, so the general ledger entries. You can do different kind of adjustments. So there are different type of adjustment transactions are there where you can do the transfer of assets, revaluation of assets, appreciation of assets. And then there is, in the last, asset get retired. So you have a truck and you kept this truck for 4 years and 5 years and 6 years. And after 6 years of using this truck retires. When you do retirement, there are two possibilities of retirement. Possibility number one, we can sell this. So once we have, after 5 years, we sell that truck. So that's a retirement. Or we can scrap it. So after 5 years, this asset become scrap, it is not usable anymore. So you can do that as well. So that is another possibility. So this is what the steps we're going to do in the SAP system. So there is something called verification of the configuration, which we're going to do. We're going to create asset master manually. In order to create asset master, there is a template also. Then we're going to create purchase cycle. Then we're going to see the capitalization document. Then we're going to verify asset master record, and we're going to see after capitalization what happened to the asset master record. We can do the capitalization. We can do retirement process. And in the last, we're going to look at reporting. So this is our end-to-end cycle. This is the first cycle. And then we're going to do second cycle also, in which we're going to create asset master, verify the capitalization document. And then we can run depreciation. We can create capitalization document manually. We can also do capitalization credit memo. There is a functionality in SAP that is called capitalization credit memo. There's a retirement process, and we do reporting process. So that is what we're going to do today. First and foremost, we go to administration, system initialization, company code detail, and here we have few configuration. Okay. Now, what are those details? So here, we need to activate fixed assets. So if you see there, here there's a small checkbox, enable fixed asset. So that is the first thing we need to do, enable fixed asset. Second is the calculate depreciation on a daily basis or monthly basis. By default, it's a monthly. We will also be using monthly because we will be running depreciation on a monthly basis. So there are two checkboxes here. There are two different configurations. One is to enable fixed assets, that has to be on, and in the configuration there is also depreciation done, for example, on monthly basis. So that is a small configuration here. And then in the setup, when you go to financials, in finance, there is a fixed asset. And then here we have these configurations. This is another important configuration. I will go through them quickly. First and foremost, we have account determination. In account determination, we need to this first and foremost, there is account determination here. If you look at your screen, this account determination must be there because during capitalization, during depreciation, during retirement, and various other transactions which happens during fixed asset cycle, different journal entry takes place. And what journal entry will happen will be determined on the basis of the account determination which you have in front of you. So we see here, we have all these different accounts. Asset account, acquisition account, clearance account. If you want to create different account determination, we can create duplicate entry here. So you can create duplicate entry means you can create a second set of account determination because this is for motor vehicle. Now you might have a plant and machines. For that you want different account. You have offices, office buildings and others. You have for the different account. So you can duplicate and you can create as many account determinations as required. After that, we have a depreciation type. Depreciation type tells me different depreciation methods. And the most important, which a lot of people use, okay. Okay. So we have here method called straight line method. And here we have calculation basis monthly. So we do monthly basis and a straight line, which is most people use. Now, what is the straight line? straight line is a simple formula. And what is that formula? Acquisition value divided by total useful life. That basically means if my total period is 5 lakhs, if total acquisition value is 5 lakhs, and if my total useful life is 5 years, that becomes the basis for determining and defining acquisition value divided by total useful life. This is a simple formula to do the calculation in case of a straight line. Normally, there are other methods also, but in industry, a straight line method is normally being used, and that is a simple arithmetic. And that is what we see here. So that is where we have something called depreciation type. Then we have a depreciation area. Now, in the depreciation area, you can have a different accounting principle. So you can maintain depreciation on different accounting principle. So like, for example, GAAPs, which is main books, IFRS, which is for international finance reporting. So you can have different methods. Okay. So that is where we can have depreciation area, which is primarily, and accounting principle, which is being used. Now, the last but not the least is asset classes. Now, this asset class is important. So if we, let's say, I take this standard SAP, you can have as many asset class, motor vehicles and furnitures and plant machinery and equipment and whatever. So you can have different asset classes. Now, how everything gets connected with the is this. So if you look at it here, so this is the asset class motor vehicle. With this motor vehicle, now every configuration is connected here now. So this asset class has this depreciation area, which is main books. This asset class has this account determination, which is FA. Remember, we talk about account determination, so it takes from there. It's connected with the depreciation type, straight line. We discussed with that. And what we are saying is, we have a useful life. Okay. So we have a useful life in the days, in months. So here we have 72 months useful life. We have a useful life which is 72 months. Now we can have another asset class. So you can create as many as asset class as you want. So you can have a motor vehicle asset class in which you have this depreciation area, this account determination, this depreciation type, and this useful life in this class. You can have another class. So this is for motor vehicles. For plant machines, you can have another asset class. For cars, you can have another asset class. So for different assets, you can have different asset classes. But asset class combines everything. That's why asset class is an important parameter. Now we have something called attribute groups. Attribute group is the 64 attribute group as we see in item master and all that. Yeah? This attribute group can be used if in case for the reporting, analytic and other purposes for your attribute, you need to have some different additional attribute which you need to define. So that is where we have a attribute type. Now we go to finance, and here we go to fixed assets, and these are the various transactions okay. So if you see here, we have a fixed asset in the first and foremost. So there's the asset master, which you can create. We're going to do that. We're going to go there. We have a capitalization. Okay. So we can do capitalization. If I go there, there's a capitalization which we're going to go. We can do manual capitalization or automatic capitalization. There is also capitalization credit memo. Now, what is a capitalization credit memo? So the meaning of capitalization credit memo from the finance perspective, from business perspective, is the reverse of capitalization. So let me make it very simple. So when we do the capitalization of an asset, system creates a journal entry. It credit this account, debit this account. With the capitalization credit memo, it reverses that. So the effect of capitalization credit memo is the reverse of capitalization document from the finance perspective. Then we have retirement process. If you go to retirement, in the retirement, there are two methods. If you see here, look at carefully, there are two methods. One is sales, one is scrapping. Sale basically means I have this office truck and I'm selling this truck. At the end of the day, I'm selling this truck. So when I sell this truck, then system creates and it scraps. Right. So we have transaction type sales, and we have transaction type as a scrapping. So we sales, or we can do scrap. So if I have to retirement, if I do to retire, I have these two possibilities: sales and scrapping. Then there is a retirement process. You can do the transfer of the asset. So sometimes we might need to do transfer. Then there is a depreciation run. So you can do the depreciation run. We're going to do that also. There is also something called asset revaluation. Sometimes the asset has to revaluate. At the end of the financial year, for example, if there is a change in currency, if there is any other changes, in such case, we can do asset revaluation. So asset revaluation come into the picture where for certain financial reasons, we need to reevaluate, because many times currency changes happen. Many other economic factors happen. Many other financial factors happen. So earlier, my initial value was 5 lakhs. Now I need to make it 6 lakhs. Okay. So that is where we can have asset revaluation process. So that is where the asset revaluation process come into the picture, where you can do revaluation, but it is not that very often used. It is only in case of certain exceptions. You need to do a fiscal year change at the end of the fiscal year. When fiscal year is over, you need to do fiscal year change, and then you have to do fixed asset report. So that way there are several fixed asset report which will go through them as well. So creating asset master, capitalization, capitalization credit memo, retire the asset at the end of the useful life or in between whenever you want, transfer the asset if you want to. You can run depreciation manually. You can do the depreciation automatically. We go to asset revaluation, fixed assets, and different asset report. So let us say I'm creating asset master now. Okay. So I want to create an asset master. Okay. So I want to create a new asset master. So at the end of the day, it gets scrapped. So here, if you look at it, it can get scrapped. So here we have asset master data. See that here we have asset master data. I have created an item group asset just to, so this is the configuration I have done in the system. Now, if you see here, the asset master data look very similar to item master. Only one tab. So if you look at the screen, the asset master data and the fixed master, that item master data is very similar, except this one tab. Now, if you see here, on the right-hand side, we have an item tab that is displayed. If you want sales tab, you can include sales tab. If you want to sell that tab at the end of the day, or you can choose select that later on. Purchase item category is selected, and there is also something called virtual item. If you see this carefully, there is also something called virtual item. Now, what is the virtual? Now, there is also a concept called virtual fixed assets. I'm not talking virtual assets today though, but hopefully I will do another session which describe what is the virtual fixed asset. Okay, so that would be possibly another session. If you see here, we will do another session on this virtual item. So we are not selecting virtual item. Inventory item is just is gray out. If you see the virtual item also gray out. If you look at this carefully, the virtual item is also not active because there is a configuration for that also in order for using virtual fixed assets. But sales item category and purchase item category, these two item categories are active. So I can create and let us say asset master AS06. I'm creating a truck. So I'm creating a truck. I just put some nomenclature so I can identify it. So I'm buying a truck. Truck is my fixed asset. Then these things are same. This is like regular item master. So I put a unit of measure, so nothing really different here. Item master, nothing really different here. Now, when we come to fixed asset, now this screen is different. Okay. Now that basically means we can have first and foremost, the most important is asset class. Remember, we talk about in the configuration asset class, because asset class is linked to depreciation area, depreciation type, account determination. So asset class controls everything, because from the configuration perspective, asset class is important because asset class is linked to what? Is linked to account determination, is linked to depreciation area, is linked to depreciation type. Okay. Then we go to asset classes here. From the drop down, I can choose asset class, let us say motor vehicle. And if I go back to asset group, you can define some asset group of asset group vehicle. This asset group is mostly for reporting purposes. Depreciation group, this is also from the reporting purposes. You can also associate it to an inventory number. So if in case you need to maintain this item in inventory, because inventory tab here is displayed, because you cannot choose this. sometimes we get confused about it. If you see here, item master, inventory tab, inventory item number checkbox is displayed. So we cannot have this in the asset master record. But what SAP does in the side, it allows you to enter the inventory number. So that basically means I can still create an item and I can associate it here. Another thing which I can do here is serial number. So many times my assets also have a serial number to it. And for many times for asset, serial number is very important. So you can associate serial number to the asset as well. What location the serial is? So this location is in Bangalore, Delhi, Kolkata, Mumbai, wherever. So it is in Delhi. Who is the technician? If this asset is involved for some technical, we're buying machines and all that. So the technician, we can put it here. Who is employee? So we can select the employee. Deepak Garg. So we can choose employee here. And capitalization date is, that is blank. We don't have any capitalization date yet because nothing, we have not capitalized it yet. We are just getting record. If we see it, because we selected this asset class, so we select this depreciation area main books. Depreciation start date is blank. Depreciation end date is blank because we don't know when the depreciation is gonna start because we have not done that yet. Useful life in the month, because we are doing depreciation, we selected in the month. So we system automatically take here month, and system saying 72 month. 72 month means 6 years. So this strict useful life is 6 years. And this is here depreciation type, and this is the depreciation type, which is a straight line, and this straight line is coming from this asset class. So when the moment I choose this asset class, it automatically takes my depreciation area, my useful life, my depreciation type, that automatically come to as a default. When we go to depreciation values, so everything is 0. So acquisition 0, retirement 0, transfer 0, write-up 0, depreciation 0, everything is 0, 0, 0. If I go to depreciation here, nothing is, everything is blank. Cost accounting, if you see here, cost accounting, for example, project assignment. Now, what does that basically means? If you are buying this project, this machine, equipment, or vehicle, or asset for a specific project, you can assign that project to an asset master. Some point of time, I'm planning to do a session on project management. When I do this session on project management, at that time, we will also talk about that how can we have project cost object being assigned to asset master, because I'm buying this machine for this particular project. So you can assign that machine to a project. And that is what you can do the assignment. If you want to, we talk about attributes. So if you have some attribute, you can assign those attributes. And then we can save it. So see the message in the bottom, asset AS06 has been created. So what we did, so we created a asset. And what was that asset? AS06. We created an asset. This is our cycle. This is what we are doing. These are our steps. So we're doing AS06. This is our asset. And if we go to this asset, if I choose this asset, if I go to drop down, this asset should be there. And AS06, yeah, this is the asset which we created today. This asset is there. If I go back here, all that information which we saved is here. So this is our asset AS06 created. Now for this asset, let us say I do a purchasing of this asset. So I go back to my purchase cycle, which is similar. So I go to purchase. I create a purchase order. I select my vendor. So this is any vendor, whomsoever. I select my item, AS06. This is my truck. And what is the unit price? So let's say this is for 6 lakhs. So this is the cost. So the purchase price for this truck is 6 lakhs. So whatever, you can put any value, doesn't make a difference. So we put 6 lakhs. And then we save it. Operation completed successfully. We hit back. This is the regular purchase order like we created for any purchase order. The only difference in this purchase order is rather than item master, we entered asset master in it. After that, we want to do good receipt. So the next step, we do a good receipt. It's not inventory item, by the way, remember? So operation completed successfully. So we did good receipt. This asset item AS06. And then in the last, we do AP invoice as we have been doing. So this AP invoice is same in AP invoice as we have done many, many times. Nothing different, nothing unique in this. Okay, we save it, we add, yes, and operation completed successfully. So now, after doing this, I want to go to relationship map. Now see here. So this was the purchase order we created. This is the receipt we created. This is the vendor invoice we created. And the moment we create a vendor invoice, this capitalization document has been created automatically. This is an example of capitalization document creation automatically. You can also, we could have also went to fixed asset and we could have created this fixed asset depreciation manually also. If I go back, if I close all these windows, so this is a capitalization document which got created automatically. If I would have gone to fixed assets, if I go to capitalization document, you can directly go there also and you can create a capitalization document manually using this function. Same effect. Many times what happens is I have purchased this document in the past. I don't have a purchase order number. So there's nothing called PO and good receipt and invoice verification. So in such cases, you can directly create a capitalization document because this document might have been purchased before. It's a past asset, etc. So that is why we could have come here and I would have put my asset. And if I put my asset, I can choose any asset here. And then I put their value, whatever that value is. And I add, then system will create capitalization document manually. We have created capitalization document automatically. And if you add it, system will create capitalization document. So that is the second way of doing capitalization document. Now let me go back to the relationship document. Now in the relationship document here, we have a capitalization document because I purchased this asset. Now capitalization document, I double click on this capitalization document. Same screen which I showed you there. Same document which I showed you in there. Either you do the manually or system creates for you. Now here system says that is origin is PU is a purchase order 521. Status is posted. Posting date is today, which is 555. Asset value date is 555 because asset is being capitalized on 55, which is today. Now here, this is the asset AS06. This is description truck, and the total value is 6 lakhs. If I go to accounting, it's a main book capitalization. Now I right click and I go to journal entry. Now see the journal entry now. In the journal entry, if you see here, the motor vehicle account which is 11300, and that is coming from account determination, which I showed you in the beginning. From there, it debits my motor vehicle for 6 lakhs. So that account entry happens automatically. And then we have acquisition clearing account. This is the clearing account, and this account gets credit for 6 lakhs. So this is a general entry which happens automatically. These accounts which are coming, they are coming from account determination, which we set up in the beginning. These accounts could be whatever we want. As I mentioned in the beginning, this is for motor vehicle. Now, if you're buying plant machine, you might have a different account, then you have to create different account determination for that. And then you assign to your asset class. So depending upon your asset class, you can have a different GL. Motor vehicles, 1 GL. Plant machinery, another GL. Other equipment, other GL. Virtual asset, other GL. So you might have 5 different GL to capture their asset values, depending upon their asset classes. So we have this asset class debited for 6 lakhs, and this is credited here in this document. We close this. We close this. Now, if you go to AP invoice, if you look at AP invoice general entry, if you see here, in AP invoice, Acme Associate, which is my vendor, has been credited for 6 lakhs 24,000. 24,000 is check. And acquisition clearing account has been debited because it's an asset acquisition. So system clear my acquisition clearing account, and this account gets debited. So if I go back here, if I go back, I close this. If I go to capitalization document again, general entry, so this is acquisition clearing account. This is credit, and there it gets debit. So this account get nullified. Okay. So in capitalization, this account is hit, and when I go to my account payable, AP invoice, again I look at the general entry here. So acquisition clearing account is debited. So 6 lakhs debit, 6 lakh credit. So this acquisition clearing account at the end of capitalization is clear out. Okay, and we close it. Now we close it. Then we go to GRPO. This is GRPO. In the GRPO, if I look at it here, I don't see any inventory posting. Do you see that here? There is no inventory posting. And not only inventory posting, it doesn't have any other posting as well. It doesn't have a general posting as well. Because this good receipt posting is just a statistical. It's not an inventory item. So it doesn't hit my inventory. It doesn't hit my any general ledger. So there is no inventory posting document here, and there is no general entry item here because it has no consequence effect on my inventory. So those are the account entry which happens. Of course, in purchase order, there is no account entry anyways. So I just want to make sure that in asset accounting, we are clear as far as what kind of account entry happens at what point, because this becomes confusing what kind of accounts we wanted to post or what kind of accounts we don't want to post. So we close this, we close all this, and we close all this AP invoice. After that, I go back to the asset master. So we have done the capitalization. And if I see capitalization, if I go back, I can see the capitalization document here as well. Document number 8, created on 5/5. And if I go back here, asset master, and I select my asset master, which we created today, which is AS06, which is my truck. Now I want to see my fixed asset data here. So now my acquisition and production cost, the first and foremost, look at here, the asset status is active. So the moment you capitalize the asset, the status of that asset becomes active. Now this asset is in active status. When you retire, then it is become inactive. And then what is the capitalization date? Today, 5/5. So today we capitalize this asset 5/5/20. So this is the capitalization date. This get automatically set up, and it's a display mode. You cannot change it. The moment you create capitalization document, automatically or manually, this date get automatically set up here. Then we have a total acquisition and production cost is 6 lakhs. See that 6 lakhs. Then we have a net book value is 5,58,337. And then we also have ordinary depreciation for 91,000, historical NLB for 508,000. So you say 6 lakhs. Now from where these values are coming from? 6 lakhs we know because this is our production cost. So this is my purchase price. So my acquisition and production cost is equal to 6 lakhs because that is what I have purchased this truck for. Now I go to values here. Now here in this value, if you see in this year, in the 2020, in this depreciation area, you can also check in other areas also. If you have a different areas. So we see in 2020, and I see my acquisition value is 6 lakhs. End of year, 6 lakhs. And here we have my depreciation value 91,663. That is my ordinary depreciation. If I go to depreciation tab here, from where this 91,663 is coming, we see that here 91,663. From where this is coming. So if you look at it, the period 1, 2, 3, 12, right? The first period is 0. Why it is 0? Because this fiscal year starts from April 1st. Because it is start from April 1st. So April month is gone because we capitalized this in May. So for April is 0 value. For April, the value is 0. But period 2, period 3, period 4, period 5, period 6, period 7, period 8, 9, 10, 11, 12. For remaining 11 months, we have planned depreciation. Now see the value here, planned, posted, nothing posted. Because we have not posted our depreciation yet. So posted is 0, 0, 0, 0, 0, 0, 0. This is planned every month, 8,333. Now, how it is coming? What is the basis for that? Remember, we talk about simple formula in the beginning, in which we say, in case of a straight line theory, what happens? System divide. So if you look at it here, if you go to calculator, so we have a 6 lakhs. This is 6 lakhs. So total value is 6 lakhs. And my useful life is 72 months. And I divide by 72 months. This becomes 8,333. So that is where system telling that every month my planned depreciation is 8,333. 6 lakhs or 600,000 divided by 72. And that is where, if you go back to the calculator again, so we have 8,333 multiplied by 11. So that become 91,663 for 11 months in this year remaining, because 1 month April is gone. If you see here, and that is why we have depreciation 91,663, 91,663, 91,663. Total cost is 6 lakhs. And then if we 6 lakhs minus 91,663, that become my net book value. So net book value become 5,08,337. So that is how system calculates my net book value. Okay. So these are the book values. This is my plant depreciation. There is no depreciation which is posted yet. In the cost accounting, we don't have any project assigned to it. And if we come back here, this is depreciation start date is this 5/1. At the end of the month, it always starts at the end of the month or beginning of the month 5/1. And this is going to end for 6 years by April 30th, 26. And useful life is 72 using a straight line method. Good. So that is how system does the capitalization and look at the effect on asset master. Now here we have a manual depreciation, or I have a depreciation run. And if you go to preview, so we have the two choices here. We can done manual depreciation, or I can run depreciation. So in the manual depreciation, what system does, you can put an asset number. If you want to run manual depreciation, then you can run it any time, any period, any moment. And then you put your asset number and you put a value and then you hit enter. So you can choose an asset and you can put a value and then you can hit enter. So that way we do manual depreciation. Okay. And you can run manual depreciation whenever you want to do. Now, if I go back to depreciation run here, now what system do, it automatically done my previous depreciation run. So these were the run I did in 330, maybe I may be showing to someone. These are the two I did yesterday when I was preparing for this class today. So these are the posting date which comes automatically here. Okay. Now, if you look at it carefully, and if I go to preview, so we have to click. So we go here. It tells you your previous depreciation runs. I go to preview. And in the preview, we have this asset AS06. This is some other asset. And what system is saying that for this asset, it's a truck. And there's 8,333 of depreciation. You want to execute? I say yes. See the message in the bottom. Operation completed successfully. So what we did, we created a depreciation run automatically. Not manually, automatically. Now, after running this depreciation run, We go to depreciation run. If I go to depreciation run, I want to go back to asset master again, and I want to see what's going on with my asset master. We go to A60. So this is my asset master. Asset master is assets, is trucks. I go to fixed assets here, right? Now here, I go back to my depreciation tab. Now see the plant button here. So what is system doing? That in this period, second period, which is May, we posted a depreciation for 8,333. This posting depreciation was all 000 before. Now this posted depreciation is 8,333. So after posting depreciation, this column, now in the next month we have not done, and everything else is 000 because we have only run depreciation for 1 month, which is May. So this column is planned for this year. This is what is being done so far. So we have run one depreciation run. This was automatic. If you see that here, automatic depreciation, because with the depreciation run which we did, we run the depreciation automatically. That is why this automatic depreciation is updated. Manual depreciation we did not do. We could have done manual depreciation too. Sometimes we want to do manual depreciation, some amount, some change in the currency, whatever. So we can manually depreciate that as well. Now, if I go back to, if I right click here, I have asset transaction report. This report is very useful report, which everyone should know, like what actually has happened. So if I go to asset transaction report, and then I can see here, these are the different documents which has been posted. So this was my capitalization document, which has been posted. Okay. So you can see that here on this account, document number 8, on this date, this document number, this is asset value date 5/5. We did acquisition, and this was the amount of that particular asset. Okay. So this is what we have done so far. So we created asset, we did the acquisition of assets, capitalization document, we looked at it manual and automatic depreciation run. Now here, we also have something called capitalization credit memo. Now capitalization credit memo is the reverse of capitalization document. Sometimes we need to put a credit to the amount. So let us say I put some amount here, 40,000, and I add it. So what happened? We created a capitalization credit memo document. This document number is 3, which happened on this date 5/5 for this asset truck, and this happened for total value 40,000. I did a credit. If I right click, then we see the journal entry. And if you look at the journal entry, the most important thing here is that motor vehicle account is now credited. When we create a capitalization document, this motor vehicle account was debited. Now this account is credited. So it reduces the value of assets. This is a clearing account. So that is the meaning of capitalization credit memo. Then we also have asset retirement. So now let us say I want to retire the assets. If I go to asset retirement, for the asset retirement, there are two possibilities. See that here in the drop down in transaction type. So here, I can, transaction type, we have two possibilities. Either we can sell or we can scrap. Sale basically means you're selling that asset to a customer. Now you can do this from here, or you can also do from AR invoice. So you have both choices. If I want to do directly from here, I select the sale. I put my asset number AS06, and I can put my amount for whatever amount, 75,000. So I'm selling this asset for 75,000, and then add. So that basically means you are able to sell this scrap. That's one method of retirement. Second method of retirement, I'm not selling it because it's not saleable. Then I can go in the drop down and I can go to scrapping here, and then I can just scrap. So when you scrap, then that asset goes to scrap. There's no sales value to it. That's the second method. Or let us say I want to create a sales order. You can do a typical sales cycle also, which basically means if I go to sales, if I go to sales order, if I select any of my regular customer, whomsoever, and here in item, I put my item AS06. So now I'm creating a sales order for assets. So you can do, which I showed it to you in the finance, fixed assets is a retirement. You can directly retire from here, or I go to sales cycle. In that sales cycle, I put the amount. So I'm selling this truck for 70,000 rupees, whatever amount. Because sometimes you maybe keep creating a typical sales order. You can do that also. Or you could go to retirement screen in fixed assets, and you can do from there as well. So you have both choices. Then we hit add button. Then we hit say yes. Sales order created. Now this sales order is for assets. Then we go to copy to. Then we create a delivery document. Now this delivery is a delivery of the assets. Because many times, why you do this? Because when you're actually delivering the product and all that, if you have all the delivery shipping process, then you can do this. If not, then you can do directly retirement document in the FA module. So you have both functions available to you. And then we hit add, and we hit add. Delivery document created. Then the next one is AR invoice, where we have a customer invoice. So we have AR invoice. So here we have AR invoice. I put my tax code. This sales order delivery and invoices, same invoices we have done many, many times, nothing different. If add, okay, yes. So operation complete successfully. And now if I go back to the relationship map here, now system automatically generate a retirement document. This retirement document number 4 has been generated because now I've sold this asset to my customer. If I go to retirement document here, if I double click on it, now this is the same retirement document. We could have gone there also. But if you do directly, then you are not linking that to a sales invoice. Here you link to a sales invoice. Now you have both choices. If you want to link to a sales invoice, you can do that. Or if you don't want, then you can directly post a retirement document. So depending upon what kind of business requirement you have at the time of retirement. Or if you want to scrap, then obviously you can just scrap it out. At the time of retirement, if I go to right click, there's a journal entry here. Again, there is a fixed asset retirement revenue is credited. For retirement revenue, there's a separate account because we sold 75,000. So there is a value for that. There's a clearing account for 75,000. But if you see this asset, motor vehicle, that asset value of the motor vehicle has been credited for 560,000. 560,000. And then it goes to net book value during asset retirement because we have done premature retirement of this. So that asset value is gone. So that asset value has been credited 560,000. Because we did retirement, you can do any time. You can do retirement before useful life or after useful life. And because we have done the retirement useful life, therefore my motor vehicle account has been credited for 560,000, 560,000. If I go to AR invoice here, in the AR invoice, if I see the journal entry, then we have my customer is been debited X amount, and then this is the retirement revenue clearing account for 75,000. If I go back to my asset here, so now if you go to asset, if you go to fixed asset here, and then now in this fixed asset, the status is inactive. It was active. It's inactive now. Now your historical production cost, book value, all become zero now because retired. And here I put retirement. So 560,000 has been put into the retirement. And this is my total. There was only one plant depreciation, so the rest of the depreciation was never run. And that is what you see here in the asset master data. Its status become inactive. Now you cannot depreciate this. If I go back to my asset transactions, so these are the different asset transactions we have done. Okay. So we have done 5 on 5/5. This document number AC8. This was my capitalization for 6 lakhs. Then I did a credit memo on 5/5. This was a transaction type acquisition, so capitalization. This was credit memo. and credit memo we did for 40,000. So that is why the asset value was for 5,60,000. So that is why when we did the retirement, so net asset value was 5,60,000. So that has been write off. So 560 came from 6 lakhs minus 40,000. And then in the last exercise we did a full retirement. And in the retirement was for 75,000. And I write off 5,60,000. Why 5,60,000? Because my acquisition, my capitalization was 6 lakhs. My credit memo was for 40,000. 6 lakhs minus 40,000. This become 5,60,000. So that is whole end-to-end asset cycle. So that is what I wanted to talk to you and show to you guys. And thanks all. So that is the session for today on fixed assets.